Us through. What's the narrative from the technicals?
Sure. I mean, we started at the beginning of this year, and many traders didn't feel that we were going to have these very strong rallies given the economical data. And I think sitting around the table, we're all looking at data, we're all looking at numbers, and you can take a look at the economical data or the technical data. And the technical data is giving a very different picture. The Dow right now is very close to 16,300, and there are three dimensions to the markets. There is price, pattern, and time. And in terms of price, we're pretty much almost there. We're about 150 points away from that price target. From a pattern perspective, we call this an extension, and that means that when the markets reach such levels, there's usually, 8 out of 10 times, there's usually quite a strong pullback, especially at given levels. Now, we've got the Santa rally, or the Fed rally, if you want to call it this, and many traders are saying that why get in the way of a freight train? If the market's going up, we don't want to get in the way of the trend. But what's really interesting, Jeff, is that the other dimension of time is actually painting a very dark picture into 2014 to 2015, and that's something I want to go into in the next chart or so.
Okay, well, let's roll it forward, and you can explain this to us.
Sure. Now, what's happening is that there are long-term cycles, intermediate-term cycles, and short-term cycles. Now, there are various cycle degrees. Many economists will look at the 50 or the 60-year cycle, and there's the 84, 85-year cycle. If you go back to 1929 and you count 84 years from that 1929 major events in the market, it actually comes up to 2013. So we're approaching the close of 2013, and the short-term cycles also point to December 2013. So it's interesting to see that price, pattern, and time are converging pretty much at the same levels. But also, let's talk about the shorter-term cycles, and those are the 15-year cycles, and actually 14 years to be precise. If you count from 2007 high, that 14 years gives you 2014, but the half-year cycle gives you 2007. So what we're seeing is these turns at very precise levels in the markets. And what I've pointed out over here, even on the short-term scales, if you subdivide these into the shorter-term cycles, they're giving very accurate turning points, but at some points you're not even getting a turning point, you're getting an acceleration. So given that the Dow has approached that price level, from a technical picture, I'm actually quite concerned going to 2014. And I think we're going to see a very sharp sell-off. At what level? I think we're going to see the market shave off 4,700 points. May not do it in 2014 all in one go, but I think certainly going into 2014 and 2015. But the two key months to watch out for is January and March of 2014, because that's where the cycle turns are coming in.